The market is completely nuts right now. From our most recent drop in March, so many stocks are up a gigantic amount, and it makes you wonder, did I miss something? Is it too late to get into stocks now? Is now the time to buy? Apple's up 75%, Amazon 79%, Tesla is up 284% since the end of March. Facebook's up 64%, Chipotle up 122%. Who would have seen that coming? And Wayfair is up 895%. I can't even fathom these numbers, because it's like, if we just would have put all of our money into those few things, we would be gajillionaires practically, right? And that's kind of how it feels. Of course, there's the flip side of this. Companies that still have not recovered yet or haven't even come close to recovering. The airlines, Disney, Coke, Under Armour, and so many more are still struggling to get in the green. With so many common names hitting such high prices, how do we decide what to do with our money? Is now a good time to buy stocks? If so, which ones do we buy? If you're looking to make some quick, amazing returns like the ones I just showed you at the beginning of this video, that's pretty unlikely. In order to see such profits like that, you have to buy when the market's down. You have to find the courage within yourself to buy when everybody else is selling. That is such a mind game. Our natural thought is, well, let me wait till it drops a little bit further and then I'll buy. But you can see the problem with this is, like, when is that going to be? When is the bottom going to be the bottom? We don't know this until we've passed the bottom, we're well above it, and we look back and say, oh dang, that was the bottom that I should have bought in at. Then we think, I'll just wait till the stocks hit bottom again. I'll just wait until there's another drop and then I'll buy. This starts the cycle all over again, and you see the problem here with this, right? Then on the other side of that, you start to see people that see the market going up and then they're like, oh, I'm gonna get in, and then other people start getting in, and it creates this escalating effect and ramps up the prices of stocks, which is what we're seeing right now, because no one wants to miss out. When you see something growing really quickly, you're like, oh dang, I wanna get in there and get that so that I can feel the growth too. And when everyone does that in such a mad rush, it really drives up the prices of these stocks exponentially. Here's a chart that shows a really great explanation of the emotional roller coaster that we all go through when we are trying to invest in the stock market. I'd recommend that you pause that and take a screenshot of that chart so that you can really read through the different phases and let that sink in, because it really is the different emotions that you'll feel when you've got some money in the market. And it shows you that if you just hang in there, you'll just come back through the ride and you'll be back on top. Okay, so how do we avoid this emotional roller coaster? You have to create an investment plan for your money and stick to it regardless of what's happening in the market. Figure out how much money can I carve out for my budget every single month for my future. Set that amount aside and invest it on a regular basis, every paycheck, every month, and get that money invested for you without even paying attention to what's happening in the market. This is going to allow you to buy in at all different price points throughout time. You're going to buy when the market's low, you're going to buy when it's high, and over time it won't matter what happened on any given day, week, or month, because if the market's dropping or if the market's low, you're buying. So you have more opportunity for those large, massive gains that we talked about in the beginning, because you've just been buying when the market's down. And that can happen if you just set yourself on a schedule and invest without thinking about what's going on in the market. As crazy as that does sound, because it's like you don't want to be blind when it comes to these things, but statistically, that's just the way to invest for the long run and not feel massive losses. Let's revisit the original question. Is now a good time to buy stocks? I wouldn't dump everything into the market all at once if you're sitting on a large pile of cash, but I also would not wait for the right perfect time to get in. That will just loop you into that emotional roller coaster that we just went over, and you will lose your sanity if you try to invest that way. And personally, we've got all of our extra money invested, so we weren't able to buy extra or anything when the market dropped because all of our cash has already been invested. So we saw those massive swings personally, and I just kind of had to, cling to what I know, and we've recovered. I am speaking from experience of like going through this whole roller coaster myself and ourselves with my husband. But if I were just sitting on a pile of cash, then what I would do is come up with a strategy and a plan and say, okay, let's just use $50,000 for example. If you happen to be sitting on $50,000, $10,000, $100,000, whatever your lump sum is, even if it's $5,000, any lump sum amount to any individual is a lot. I know what it's like to have your first $1,000 and your first $5,000 and your first $10,000. Like, all of it becomes very precious to you because it takes a long time and a lot of work to save up that money. So I know how scary it is to kind of start investing that money that you've worked so hard for because you're afraid to lose it, of course. But this is not gambling. Investing in the stock market, if you do it in a smart way, is not gambling. It is investing. You are buying into companies that you believe are going to do well for the long term. So keep that in mind too. You're not just throwing your money into the wind and hoping it sticks and explodes into this huge, gigantic profit. I mean, some people think that that's what investing is, but smart investing is not that. It's just giving your money to receive a portion of a company that you expect to do well over time. So that being said, take your lump sum and divide it over time. To use the example of $50,000, if you wanted to invest over 5 months, you could take $10,000 and invest that every single month for 5 months to get your $10,000 invested. Same thing if it's $5,000, and if to you that's really scary to invest, take that $5,000 and invest $1,000 every month over the course of 5 months and get your money working for you. But don't put it all in at once because, well, if you're nervous, don't put it all in at once if you're nervous, since we are near all-time highs again. If you put it all in and the market drops next month, then you're gonna see a big loss. But even if you do that, it's okay because this money that you're investing should be for the long term, meaning 5 years or more. So keep that in mind as well. If the market continues to go up over the course of 5 months that you invest, you're gonna look back and say, dang, I should have just invested all of it 5 months ago and I could have had all that profit. But on the other hand, if the market goes down over the next 5 months, you're gonna think, whew, I'm really glad I didn't invest it all up front because now I was able to buy in at different price points. A Vanguard study actually showed that investing a lump sum outperformed dollar cost averaging, which is what we were just talking about, 64% of the time over a 6-month time period and 92% of the time over 36 months. But the main thing in this is markets tend to go up over time. So if you're taking a long time to get invested, you're gonna miss out on these run-ups because the market does tend to have more up days than down days. Taking all of this into consideration, focus on why it is that you're investing. It should be for the long-term growth of your money over time. This is where the market really shines. Time in the market is much more important than timing the market. This chart shows the longer we invest, the lower our chances of actually losing money are. The yellow represents times you lose money, and the red shows times you have made money. Over a long period of time, the risk of losing money goes to a very small percentage. This is why it's so important to keep money you need in the short term out of the market, and the money you do invest, remember that it is for your future years out. Even though we see some stocks have had some massive run-ups, if we take a step back and look at the market overall, we're just now near where we were a few months ago. Which brings us back to the question of why are you investing? If it's for long-term growth over time, yes, get invested and start the process. If it's for a quick return, I would be very cautious since we are near all-time highs. You might expect a quick profit and actually have a quick loss instead. So be cautious if you are looking for that short-term gain because it's really statistically unlikely that you will have that. But statistically over time, you will have much better chance at a decent return if you just hang in there and invest over time. If you need help figuring out what stocks to buy and how to even research stocks, take a look at this video because I do walk you through buying your first stock as a beginner. Investing in the stock market is a great way to build wealth over the long run, but you have to remember that in the beginning of your investing journey, the majority of your growth in your portfolio comes from your own deposits. So as you start out, you're depositing money, and this is what's creating the growth. Then over time, that money just starts to compound on top of itself, and you really see the benefits of investing, but you don't see that early on. Early on, your account is growing because you're putting money into it. But later, you see the amazing beauty of compounding. I would encourage you to go through this calculator and run your own numbers, because you'll see just what your specific dollar amounts that you're investing over time will grow to and what that'll look like for your long-term financial future. I also have a link to that calculator in the notes below, so check it out. When it comes to investing, no one has the answers. Everyone will say that they do, but take everyone's advice and guidance with a grain of salt, because no one really actually knows. They're just trying to guess and use the information that they have to make a prediction. Focus on your goals, invest over time. And if you do need individual help, I am offering some one-on-one guidance sessions. Take a look at my website. I do have an investing course coming up as well. So go there, take a look at what I'm offering. If I could be of service for you, I would be happy to. And of course, drop any questions below. I'd love to hear from you. In the meantime, please subscribe to my channel if you're new here, and give this video a thumbs up if you found it helpful. It really does support my channel. I'm trying to get picked up by the YouTube algorithm any day now. Would be great. But next week, I'm going to be uploading a video on how to buy stock slices, which are stocks you can get for $1 or $5. So be sure to hit the bell so that you know when that video comes out, and I will